Let's talk about where you are, where your Asia markets focus, because Japan, China, very much in focus for market players overnight. The Japanese experience of the US CPI print reinforcing expectations that we might see some intervention. We got the view from DZ Bank in the last part of the programme. What are you hearing? How close to that intervention point are we?
Yeah, good morning, Anna. I think the proof is in the pudding, and so far we haven't seen anything from the Japanese authorities, despite the fact we blew through the 152, 152.50 and 153 levels in the overnight trading in the aftermath of that US inflation data. So they're clearly not trigger happy here, or not twitching to move. The rhetoric that we heard from the ministers this morning was forceful, but not upping the stakes anywhere particularly. So I think that, the market is kind of self-regulating a little bit here, in the sense that traders are clearly nervous about the risk of intervention, and so they're not pushing it too far. And then if you look at some of the metrics that they've used to identify how sharp a move it could be before they would intervene, we're not into the territory that would be flashing a red flag signal yet. Yes, I say. Okay. On the other hand, if they feel that there's an opportunistic time to move here, then maybe that will get us over the line.
OK, that's an interesting point. And the dollar yen did seem to shrug off those comments from Canada to your suggestion there that perhaps it wasn't materially different. OK, so we'll keep that in mind. Another focus in the Asia session that we haven't actually perhaps done justice to this morning is the Chinese deflation story, closer to deflation there, if not in it right now. What does that mean for global FX markets? What's the read across into the global market story? Because there's a lot of weakness on the currency, but the PBOC standing firm.
Yeah, so interesting one again. You might expect that China, having this deflationary situation, would be exporting it to the rest of the world, but we're not really feeling that in the data everywhere else, are we? And in fact, commodities prices are starting to push north again as well. So I think for the yuan, it being held in this vice-like grip by PBOC is more important. And were that to be let loose, were it to allow the currency to weaken now, then that could be majorly destabilizing for global markets, in the sort of way that we've seen before, where central banks have tried to draw that line for a while, and then the market has pinged like an elastic band afterwards.
OK, briefly, Paul, what will you watch from the ECB? Only one economist out of all those surveyed expects a cut today.
Yeah, well, keep an eye on the euro versus the dollar, basically, isn't it? If the ECB sounds more dovish and more inclined to cut, and more inclined to cut further than the Fed, then that's really what people are going to be focusing on when it comes to the exchange rate, when they're looking at the best way to price those risks, and whether ultimately that yield gap will widen still further between Germany and the US, and what that means for the currency. Could continue to see softness there.